Celsius declared bankruptcy in 22. Mashinsky was indicted at the beginning of 23. In beginning of 24, there was a distribution from Celsius back to the people who had funds invested there. A lot of people are concerned about the clawback. The clawback applies to people who withdrew in excess of $100,000 from Celsius within 90 days of its declaring bankruptcy. The clawback is more the informal name. They call it preferential payments. And the idea behind the law is the preference payments are people who were given the inside scoop that things are getting bad and took their money out because they had gotten insider information. So if you benefited from that insider information, you owe it back to all the other creditors who did not have that information, and therefore the legal argument behind the clawback. Now, I have talked to numerous customers, and many people just simply said they could see the handwriting on the wall that the firm was going down, and they took their money out without having any inside information. All their information was public. Do they have to pay the clawback? My opinion is if you didn't do anything wrong, then you didn't benefit from any insider information. If it were me, I'd probably not pay the clawback. The burden of proof remains on Celsius or the Celsius administrator to prove that you had insider information. That burden of proof is on them. So when they go to court, they have to generate that proof. So you don't necessarily need to spend a lot of money on that. You just need to hold your ground, saying, what proof have you? What proof have you? Yeah, I took the money out, but that's because I was smart and I read the tea leaves. I had no inside information. I'm not going to pay you your money. Period. Go away. And I think that's probably the case for a lot of people. But there certainly were some people who had insider information and may have to pay a clawback. But if you didn't do anything wrong, I don't think you have to pay a clawback. That's my feeling on that. Now, if you do pay a clawback, then that's an additional capital loss on that transaction. You report that in Form 8938. If you don't pay the clawback, then there's no impact on your tax return.
Thank you very much for listening to today's show, and I hope you enjoy it. Please give us comments. We would love to respond to any questions you give us. You have tax questions that we can apply to. We will try to address it in future shows. Please hit like, subscribe, follow. Thank you. Have a great day.
The Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton is one of the top experts in crypto taxation in the US. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Go to CryptoTaxAudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.